Hi, guys. Welcome to the How I Raise a Podcast, the show where we get an inside, unfiltered look at how real entrepreneurs and VCs raise capital for their businesses. I'm your host, Nathan Beckert, and today's episode is with Nisha Dua of BBG Ventures, a venture fund that invests in underestimated founders and founders building a polycultural future. So we get into what that means. We also talk about how her first funds were proof of concept funds backed by American Online, AOL, how to treat your first fundraise as a structured process, how to de-risk and solve the chicken and egg problems by warehousing deals, how to broaden your LP base for Fund 2 and beyond, and much more. If you're tuning into this podcast to learn how to raise capital for your business, be sure to check out foundersuite.com if you're a startup or fundingstack.com if you're a VC or advisor. Both platforms will give you access to an awesome collection of tools for raising capital, including a massive investor database, a new Get Intro tool to get warm introductions, a CRM to manage your raise, a virtual data room to run due diligence, plus pitch deck hosting, investor updates, email tools, and much more. Last but not least, if you enjoy this conversation and think someone else would too, please share it with them and hit that subscribe button to get all our latest episodes. Thank you. Now sit back and enjoy this chat with Nisha.
Welcome to How I Raised It, the podcast that goes behind the scenes with entrepreneurs who've raised capital. We uncover the tips, tricks, and techniques they use to get investors to write a check. Strap in and turn it up.
Hi, welcome to another episode of How I Raised It, produced by Foundersuite.com and fundingstack.com. Today I have Nisha Dua of BBG Ventures coming to us from New York. How's your day going?
Pretty great, and excited to be here to talk about my favorite topic, which is fundraising.
I love it. We're doing our job if we're finding people whose favorite topic is fundraising.
And that is a very small percent of the population.
Yeah, exactly. I did a panel yesterday at an event in San Francisco called Founders Network Fundraising IRL, and I had a panel, and they were a great panel, but you could tell they didn't love the topic. So, it's always good to find people who actually do. Awesome. Let's just jump right into it. What is BBG Ventures? Let's start off with that.
So BBG Ventures is an early stage venture capital fund. We invest in pre-seed and seed stage companies, and we look for founders building for what we call the polycultural future of America. So what does that mean? We've done some proprietary research on how we think the concept of identity is changing in the country, that no American inhabits one single identity state, that actually we're all part of many, many communities, and that is dynamic, evolving, it's complex. And that in fact we're reaching a moment where this change or this shift is creating demand for new solutions across every major category of the economy, particularly these human fundamental needs, health and well-being, the future of work and learning, financial security, climate safety, and consumption. So we're really a thesis-driven generalist firm. But what we get really excited about are founders who don't just have professional experiences that qualify them to win, but have unique personal experiences that give them this added competitive edge or earned insight, as we call it in VC. So really looking for founders, in fact, who are very often underestimated.
Yeah, super interesting. This is getting personal right off the bat. We're only 2 minutes in, but what's your identity? I'm hearing maybe a little Australian accent or something. What? Yeah.
So I'm a cross-culture kid, and a lot of this research came out of my own experience, and that sort of maps pretty well to why we look for founders in the way we do. My parents are Indian. They were Indian immigrants to Australia about 50, 60 years ago. I grew up in a small country town in Australia of 20,000 people. We were some of the only Indian immigrants in the town. And then I sort of spread my wings and moved to the big city, to Sydney, and then years later found myself in New York. So I really inhabit sort of this Indian, Australian, American set of, cultural identities or communities.
Totally. That's very polycultural. I like it. Okay, so with that thesis, maybe if you can give it a couple examples of some of the startups that you guys have done that sort of reflect that thesis. Yeah.
Yeah, so one of my favorite investments is one of our earliest investments, actually. And it really maps to the research we've done recently, which is, one of the biggest needs in health and well-being today is mental health across every culture, every race, every gender, and every income or class. And so there's a huge mental health issue in America. And we invested in a company called Spring Health. Spring Health is a mental health company that uses AI and ML to deliver precision matching for folks to find the right therapist for them. That's one of the biggest friction points in finding therapy today. And what's really unique about Spring Health is that when they started this, they had one of the only sort of data sets around therapists and the needs of patients. So they could create that sort of first data set. We hear a lot about data sets today now with AI, proprietary data sets, but they were really early to that in mental health. This was about 7 years ago. And what's also unique about them is they're a B2B company. So they deliver their product through an enterprise model. They're an employee benefits company. And so that too was a really great example of founders who had this very specific professional experience. One of the co-founders wrote his PhD thesis in how you use machine learning to do this matching and how that can deliver better outcomes. It's been clinically reviewed and peer researched. And his co-founder, they met at Yale. She had gone through her own journey with mental health and really struggled to find a therapist. So that company is, valued at north of $3 billion today. It's been an extraordinarily successful company. So that's on the high end. And another great example is our company, Canela Media. Canela is the largest streaming platform and fastest growing streaming platform for the Hispanic population. So they have every kind of Spanish-speaking content you could imagine. And it really started with this idea around telenovelas. So the founder, Isabella Rafferty Isabella, grew up watching telenovelas in her family and also knew how much the Hispanic folks in her community wanted to make sure that their kids were growing up speaking Spanish as well. But in addition to that, she had actually run and sold 2 ad tech companies. So she understood really the business model, the best business model behind putting together a media company. And importantly, she understood that this community did not want to put down a credit card for another subscription product. And so in probably an about face for the time, we backed a digital ad supported media company, which felt very counterintuitive, but has really grown like a rocket ship.
Yeah, super interesting. If I'm looking at some Fortune article, but it sounds like you guys started kind of more focused on female founders and have sort of expanded, right? Maybe talk about that, not pivot, but evolution. Yeah.
Yeah. And I think when we first launched, the thesis was always, who are founders that have been overlooked because they don't fit the traditional venture profile or they've been underestimated by venture? And why might they have a unique competitive advantage? And so our thesis has really always been that by understanding the target market you're building for, because you've experienced the problem or your community has, you have this extra insight, this extra competitive advantage. And so when we first launched the fund, it was a time, I think, when women were not sort of a big player in the VC ecosystem, and when we looked around us, you see at that time in particular, majority of social platforms, women were the main user. They were the early adopters, women and young girls, of a lot of new social platforms, Snapchat, even Pokemon Go. And women were the dominant spender. And so at that time, it was a great place to start because VC was really just overlooking that arena. And, and there's a pricing advantage there too for a venture capital fund. So we really, as a fund, focused on sort of where is America going? What are the preferences, behaviors, priorities of folks in the country? Think it's important to keep moving and evolving with those shifts in population. And so that's why over time, we've really expanded our mandate mandate sort of beyond at least one female founder to really think about sort of, a great variety of founder profiles. And that can mean many, many different things, provided that personal experience is there.
Yeah, it totally makes sense. So what, obviously different races, different culture backgrounds. Are you also going for very young or very old founders? Or
Yeah, I think all of it applies, right? Like class applies, generation applies. I mean, we did a bunch of work a couple of years ago around sort of like, what comes next after the boomer population, like more Americans than ever are over 65, and they're entering into their third act. So that's a huge opportunity. So, we really look at this as like, who are all the underestimated parts of the population that need new solutions?
Yeah, interesting. Okay, so beyond underestimated populations and trends thereof, is there an industry thesis or
so we cover all the core sort of human fundamental needs that I mentioned. So we do a lot in health and well-being. About 35% of our companies are in health. We do a cross of future of work and learning, so workforce development. Again, we're particularly excited by under-tapped workers, so people who run SMBs, deskless workers, for example, people for whom software hasn't been built, solopreneurs. And then we think about financial security or wealth building. So, how can people get ahead when they're so worried about paying their bills and can't really see a path to building wealth. And then finally, climate safety. And we do some consumer or consumption, because I think what we will see cross-generation, cross-culture is new brands appearing all of the time.
Yeah, very interesting. Okay, let's get through a few more kind of details on the fund. Lead investor, mostly co-invest, typical check size, stage, all that good stuff. Yeah.
So we love to lead or co-lead. We do pre-seed and seed primarily. We only do pre-seed and seed. We've always loved investing early. I think it is that 0 to 1 stage that really gets us excited. I mean, this is where investing is really sort of art meets science. And as former operators ourselves, which is something that I haven't mentioned. So both my partner and I have worked at sort of from startups to public companies. And so we really understand that company growth journey and really sort of try to behave as that strategic soundboard, that operating soundboard and CEO coach for our founders. So check size typically averages anywhere from 500K to 1.5 million, and we like to get around 10% ownership at the early stage.
Yeah, very interesting. Okay, great. Cool. Anything else you want to talk about in fund related before we get into fundraising?
I think that's a really good coverage. I got to mention some companies. You got the thesis. Yeah.
Cool. Hey, actually, one more thing. Part of the theme is this, polycultural sort of. What's sort of the almost more longer term crystal ball? And maybe this is even fun, next fund or something like that. But what's sort of the macro trend you guys are banking on, other than becoming, the countries becoming more diverse? Anything else that we haven't covered?
Yeah, I mean, I don't think the macro theme for us is that the country is becoming more diverse. I think the way we think about it is to build the best solutions, you really have to better understand the users you're building for.
Right.
And we all have a ton in common, like health and well-being, number one problem people are concerned about. Financial security, number two problem people are concerned about across all of these categories. But when you start thinking about how to build for these users, you really need to understand the nuance of the population and the people you're targeting. I think what's really exciting here is that opportunity is only going to get bigger with AI. So that need for understanding users and developing more personalized and appropriate situations, I think we're just like scratching the surface on that opportunity.
Yeah, totally. Okay, let's talk about fundraising. So I think you're on fund number 2. Is that correct?
Yeah, we're on fund number 2, and we have a little funny journey because we did 2 proof of concept funds that were backed by our former employer AOL, and so we invested balance sheet capital. We had a solo LP for our first 2 funds, small pools of capital. And then in 2019, we spun out and we raised our first institutional fund, which was a $50 million fund. And then we raised our second institutional fund last year, closed that, and that's a $60 million fund. So we have a little bit of a different journey from the traditional EM. A lot of EMs, they have to go from, 0 to 5 million or 0 to 2 million, right, to get that proof of concept. We got to go from 0 to 10. But when we had to go from 10 to 50, that was a complete blank slate. So it's been
you had a little bit of a track record, at least. I mean, you had portfolio.
Yeah.
Sorry.
No. I mean, you're right. Like we had a leg up because we had a track record. And so, that was, certainly an advantage over, what many other EMs start with. And I give a ton of respect to people who raise sort of from $0 to 5 or 10. But I will say, it's an interesting journey, even to go from 10 to 50 with no LP relationships, right? No understanding of the institutional LP market.
So talk about that journey, because that is super interesting. I always find it fascinating how people make that leap.
Yeah.
Where'd you start finding LPs, right? Like, how'd you do it?
Yeah, I love this question because I think it applies as much to us as it applies to founders. I very often speak to founders who say like, I'm thinking of raising a round and maybe I should do a pre-seed or angels and friends and family. And sometimes people say to me, who are these friends and family with this money, right? Who are these angels with this money? And it all starts with one person, right? One person who's done what you've done before, who can make an introduction for you. So I think actually times have really changed. When I started this fundraising journey in sort of like 2018-ish, we did not have the amount of content that's out there today. I mean, today, if you're starting a fund, you have a gazillion podcasts, you have LPs doing podcasts, they're all on LinkedIn, they're posting, there are lists of funds that invest in different type of funds. I mean, you have like a ton of content at your fingertips. But back then, I'm gonna
interrupt. We're just about to publish our 35-page ebook on how to raise your first funds.
Amazing. I love
more content out there. Yeah.
Big plug. What is it? Foundersuite.com.
This is going to be at fundingstack.com. So stay tuned for that in the next. Okay, by the time it airs, it should be out there. Go to fundingstack.com, look for our ebook on how to raise a fund. So sorry to cut you off.
Well, I'm going to read it. So, when I started this, I went to every GP I'd worked with, co-invested with, and I said, here's what we're doing. Can you introduce me to one LP of yours that you think would be interested in what we're doing? And importantly, I asked for just one so that they would really think hard about who would find alignment with me, with our thesis, and so they would write a warm introduction. Because what I didn't want was a series of emails that were like, hey, how you doing? Do you want to meet this person? No worries if not. There's nothing worse than the no worries if not introduction email. And so that really got the ball rolling, and it got me to meet like a very broad cross section of LPs as well, because at that time I had an understanding of the categories, right? High net worth individual, family office, fund of funds, institution like endowment or pension, but it really started to give me like a deep flavor for who all these LPs were. And then it helped me sort of start to say like, okay, what are their goals? What are their objectives? What are they thinking about when they're thinking about portfolio construction?
I love that tip. That's one believe it or not, like I've done 300 of these and there's still find new tips. I love that. Can you introduce me to one? Not
Yeah.
can you introduce me to a bunch of them? Can you introduce one, right? Like even it might feel counterintuitive because you probably want access to 10 of their LPs, but
Yeah.
if they just do one and it's on the bullseye, that obviously can lead to others. Like I love that tip. That's great.
Yeah.
So how many, this is going back a decade, but like how many LPs did that approach generate for you?
That's a good question. It generated a lot. I think the better question is how many of those converted? And I think it's actually hard to pinpoint what the first or the initial introductions pinpointed, but I would say like the second and third order of that really was really where the engine started ticking. Because I think this is the question for people who are getting started. They're like, I don't know anyone. Like actually when you think about a traditional fundraise, the traditional guidance is like develop your list of 100 people, right? Like have your top of funnel really baked and then just churn through it, like pick your wave, your top tier, put them in the middle, go practice with your tier B or C first, right? Set a timeline, make sure all your materials are developed. I think it's fair to say that for anyone raising for the first time, that is a very aspirational process. I think your first fundraise, truly speaking, is a very iterative process. And you're building the funnel as you go. You've got some good materials, you improve those materials as you go, you're adding to the funnel as you go. And you really, so the thing about raising a venture fund that is a little different to raising a funding round for a startup is time of relationship.
Mm-hmm.
So some of my LPs in my first institutional fund, I spent, 18 months getting to know them, and they came into my final close.
Mm-hmm.
In my last fund, my most recent fund, there is an LP that I met in that first fundraise who I spent 4 years getting to know. And now he's one of the biggest LPs in my new fund. And so that's something, look, I think there's an element of that in raising for startups as well. A lot of VCs want to get to know you, but I think it's particularly pronounced when it comes to raising a venture capital fund.
That's super interesting. Let's touch on that. So whether it's 18 months or even 4 years, that longer relationship building cycle is something people have to prepare for. What does in granular detail, what does that relationship building look like? Is it simply sending them quarterly update on what's going on? Is it flying in, having lunch with them once a quarter? What does it look like?
Yeah. So I like to think about this as halo effect. And I think the same applies to startups raising money. So when I coach startups on raising money, I say, like, you want to create this halo effect. You want people from your network to introduce you to this person, and you want it to be warm. You want to maybe do some direct outreach, or once you get the intro, you want to have a really strong first meeting, but that might not lead to the fundraise. You want to show up in places where this person is, right? You start getting this sort of social proof. So I think the extent, and you want people who know them to be talking about you. So I really think about halo effect as sort of multiple touch points. So in the case of, this 4-year journey, for example, it's like someone makes the initial introduction. In that case, maybe the first call is over the phone, but the second meeting is in person. I got on a Greyhound bus from New York City to go up to Connecticut to meet with this team, right? We were super frugal at that point. And we had a really great meeting, and they were like, you guys seem great, but you're really you're kind of too early for us. Like, we want to see that you're going to be at this for a while. And so that's the thing about raising a venture capital fund, is that really trying to de-risk the relationship between the GPs. They want to see that you guys can withstand the test of time. But second to that, they want to see that you can do what you're saying you're going to do. That's really important, right? They want to know, like you're an asset manager in VC, so they want to know what your strategy is and they want to know that you can stick to it. So I think that's another challenge for a first time fund, which is like the chicken and egg of, well, how do I get capital to show them what I'm going to do? So you can even think about, maybe I warehouse some deals. Like in our first fundraise, we closed the first half of it right before COVID hit. COVID happened. I was 50% to goal. And Nathan, I said, I might not have the fund that I thought I was going to have. So I had to redo my portfolio construction and say, like, the world is shut down. Let's invest with what we've got and let's make good on the thesis that we shared with all of these partners. Then let's start updating people. And so, yes, to quarterly updates. I think one good rule that's really hard to unlearn is don't wait for something perfect to update people on. You can often wait till you've got like a really, really, really big win. But I think that there can be an in-between of sort of like the work in progress, right? Some of the best founders that you end up preempting are the ones who send you a really tight monthly update, where it's really clear what they're tracking, how they're progressing, what their biggest need, that they understand their biggest needs, that they're making progress. And you start to think like, wow, I really want to work with this person. And so I think there's some analogy there with raising funds. And then it's about being in the right places, right? Are you're going to the right conferences, like you're bumping into someone like, hey, you're going to this conference. I'd love to meet up with you then. I'd love to give you an update. Sometimes it can feel like you're repeating yourself, and you are repeating yourself a lot. Right? But remember, they're meeting a ton of people. And so it's really about reinforcing your thesis and giving strong examples of how you're making that come true. And then you want momentum along the way. And so that sort of really paid. And, one of the things I like to do is really think about like, what is on this person's mind? What is their unanswered question about us? So very often you hear these stories of funds that like got raised really quickly, like, oh, we did it in 6 weeks. And there's something like pretty sexy about whoever's raising that fund.
Sure.
Right? Like they came out of, some really incredible company or incredible fund. And for 90% of us, that's not the case. And so, I really think about like trying to unpack what their questions are so you can give them as much of the answer to cancel out that question. And so, for example, in the case of this LP, who I got to know for about 4 years, I knew they kind of had a question about like, are you guys just really a consumer fund? And is consumer a thing? Is that what we want to be in? And I was like, let me paint you the picture of how we started off as a consumer fund, and now we're definitely not just a consumer fund. We're 50-50. And let me tell you why this has been an evolution and how we won the right to become B2B investors. And here are the proof points along the way. And so I was really concerted about helping them understand that. And by the end, they were like, well, like 2/3 of the way through, they were like, oh, we totally get it. Yeah, like that answer is de-risked for us. And I think it's really great to be direct and say, so what unanswered questions do you have about me, name of company, name of fund? Like what would, like what's holding you back from this, right? Like I think that's when you get the really, I still remember an LP said to me, I said, so what's your last question about us? Like what's holding you back from taking this to investment committee and just pounding on the table? And this LP said to me, and they were a bit younger, they said, there's another fund like yours and the 2 GPs just split up. Mm-hmm. And we want to know that you guys aren't going to split up. And I was like, great question. Let me tell you all the reasons we're different from this fund, but let me tell you all the reasons we're not going to split up.
Yeah, that's interesting.
Won them over.
That's super interesting. I love those questions, right? Like, I love that actually, that for I'm writing this all down. What's holding you back from taking this to the investment committee and pounding the table? That's great. It's like, and do you find that LPs are pretty candid with that stuff? Because, it's the same thing that like founders often will ask VCs, why didn't you invest in this? And VCs usually give somewhat of a generic answer because they don't want to get in an argument with founders, right? About that. Like, do you find that LPs are pretty candid?
I think when you've spent enough time in diligence or in conversation with an LP, they'll give you more of a detailed answer. And I think if you feel like they're holding back, I like to lead the witness a bit. Sometimes I'll have a hunch. Or so I'll sort of like say, is it about, what is it about track record that you're still looking for? Or what is it about team that you feel is, and so you sort of like run them through and you kind of give them a leg up to say, oh wow, this person's actually really searching for genuine feedback. So it doesn't work with everyone, but I would say like if you've spent time getting to know someone and you can do it in a very open, transparent way, you can get a lot. And by the way, if you get an open and transparent answer, you think, wow, I really want to be in business with this person. But if they're obfuscating, it's a good sign that like, I don't know, maybe this isn't the right fit.
I love people that just say it like it is without hurting your feelings. They don't have to be mean, right? But yeah, really good, interesting stuff. Let me take a slight detour there. Kind of that chicken and the egg scenario, especially when raising Fund One. Now you had your pre-fund that was funded by AOL, so you had a little bit of a track record. But in general, I think that's always challenging, right? You've got this thesis, you've got a team, you guys work together. Those are interesting points. But how do you overcome that chicken and the egg or other tactics?
Yeah. I think there are different ways to do it, and it depends on means and creativity. So some people getting into this business will have the means to say, I'm going to warehouse this investment on behalf of the fund.
Define that. Just explain that a little bit. Yeah.
I will loan the management company the money to make this investment on behalf of the fund, or loan the fund the money, and then that will be paid back to me. But not everyone has that, and that's fair and true. So very often it can be, I've got one LP who's really into this. They're willing to invest a certain portion up front so that we can start warehousing. Another option can be, okay, we have this thesis. We don't have the real capital to make the real size checks aligned with our thesis just yet, or our strategy. But we're going to think about this really early, and we're actually going to start angel investing. We're going to angel invest our own money, and we're going to prove out what sort of deals we can get into. Maybe we're going to prove out that on top of the angel money we do, we can also get advisory shares because people really value our input. And so we start building this like tiny portfolio, and we build this network that really demonstrates or reflects our strategy.
Yeah, those are good. Yeah, good. How many, if you recall, I'm asking you questions that go back a decade, but how many deals did you have from that AOL-backed fund? Like how many?
We had a lot. We had 40 companies in our first fund, and we had 25 companies in our second fund.
Gotcha. Cool.
We had a lot of track record. We were very lucky by the time we raised our institutional fund.
Did AOL stay on as an LP and funds the...
AOL was acquired by Verizon, but Verizon stayed on as an LP in the fund, a small LP. But very intentionally, they were not an anchor LP because we wanted to really broaden and diversify the LP base into family offices, into fund of funds, and into institutionals.
That's a great segue. So let's talk about kind of going on to Fund 2 and expanding into different LP categories. Why did you do that? How did you do that? What were your thoughts? Like, did you say, I want to have 30% family offices, 10%, institutional, or what?
Yeah. So I actually did it with Fund 1 because that was effectively a second fund for me. So I knew that to have longevity, we would need that mix. I just personally didn't feel comfortable with the idea of raising from a bunch of high net worth individuals because that didn't feel sustainable for me. I mean, I think the liquidity cycle for high net worth individuals is really unpredictable, whereas more sophisticated LPs who do this for a living, when they back you hopefully for 3 funds, or they have some strategy and they have like here's why or when we would not or would invest the next time round. And so in that first fund, we added a Fund of Funds. We added a sophisticated family office that had an established venture capital program, and we added an endowment. Oh, sorry, I should say a pension. So we got one each of the big categories. And, we had a bunch of smaller family offices and we had some corporate partners as well. So then in this next fund, it was like, all right, let's really double down on this. We added an endowment. We added some more established family offices. And so it's really just always been about what is the long-term platform that we want to build and who do we need behind us to be able to do that?
Fund one, you had some corporates, a pension, a bigger family office, and was there another institution there?
Fund of Funds.
Fund of Fund. That's right. Yeah. Fund of Fund. And then the rest was mostly high net worth. Is that kind of the makeup?
Yeah, that's right. Yeah.
Gotcha. And then this fund too, you added endowment, more family offices. Did you get rid of all?
More Fund of Funds. More Fund of Funds. And so we have a lot less individuals in this fund.
This is a weird question, but which of those categories is most helpful to you? Do you get the most advice, guidance from family offices or fund of funds, or is it all fairly equal? You know what I'm saying? Which is the most valuable asset investor class beyond the dollars?
I mean, listen, they're all valuable in different ways. It's not just about asset class. It depends sort of who's taking a really sophisticated portfolio approach. So very often the fund of funds are doing that, and that's their entire business, right? Pensions and endowments have other businesses as well, but they can have very sophisticated portfolio construction, as can some of the established family offices. So I think often it depends on the sophistication within the organization. Is there a chief investment officer? How many asset classes are they investing across? Do they have 2, 3, 4 managers in their portfolio? Do they have 20 managers in their portfolio? So I would say, some of our favorites have been our fund of funds who've been in business for a long time and who see a lot, right? They see a lot. Yeah. They're great to have on your pack. They think very deeply about portfolio construction and sort of they're always the first person you can call as you're trying to tweak your own strategy.
I'd be curious. I don't think I've seen any sort of ideal scenario of investor constitution by fund, right? That'd be sort of an interesting analysis. An ideal fund one is this many family offices. I don't know. And I'm sure it's different for every firm.
Yeah.
Very cool. Let's see. I'm looking at that Fortune article. Your anchor was State of Michigan Retirement, right? So they were the
so we don't call any of our funds our investors an anchor actually, but we have State of Michigan, California Endowment, Pivotal Ventures, Fairview Capital, Illumen Capital, amongst others.
Yeah, very good. Any unique things when you're pitching the George Kaiser Family Foundation or a foundation versus endowment versus fund of funds? Do you tailor your pitch a little bit for those different categories or not so much?
I mean, again, it comes down to how does the endowment foundation, where do they view this within their portfolio? So there certainly are family offices and foundations who say, I've got a particular interest in healthcare or climate or challenges facing young people in America. In the case of the George Kaiser Family Foundation, for example, they actually just have a very established venture capital program. So that is separate and aside from the work they do as a foundation. Yeah. And I think for us, though there is some alignment, for example, with Pivotal Ventures, they support sort of women's programs. Generally speaking, we like to work with LPs who are highly focused on returns, and not focused on just one category, because we are a generalist fund. So I think it would be disingenuous to go to an LP and say, like, let us tell you only about healthcare, right? I'm not only a healthcare fund. I can tell you what we're doing in healthcare, and that might be of interest to you, but it's not the only thing we do, and you have to be comfortable with that.
Totally. Okay, a couple more questions. I'll let you get back to work. But how long did it take to raise Fund 2? Or maybe even both, Fund 1 and Fund 2. I think you mentioned Fund 1 already. Yeah.
I would actually say both of them were 18 months. And the reason for that is that we had COVID in the first one, and then we had a market downturn in the second one. So we are
Fun, right? Yeah.
We're no strangers to a protracted fundraise.
Interesting. All right. Any tips you like to, I mean, we've covered a ton here. A lot of it's relevant for emerging managers, but any tips for founders raising capital in today's market, which is a kind of a tricky market again, Yeah.
I mean, I would say a few things, like, you really have to think about whether you want venture capital and why do you need venture capital. Some businesses are small businesses, and that's okay, and they don't need venture capital. If you're getting into VC, that requires a certain type of growth and certain expectations. So I think that's key. The second is having a great process set up. You should think about a timeline. You should think about a CRM. You should have enough shots on goal, and you should really do your research on who you're talking to. I think the third is you need a really great narrative arc. People really need to understand what the big opportunity is. They're thinking about three things, right? They're thinking about why now, why this product, and why this team. And it's the same for us, right? That is true of any pitch, whether you're a VC fund or a founder. And so if I could leave anyone with my top advice, it's like, always take a step back, look at your deck, practice your pitch with people, and say, are they coming away truly with high conviction on why now, why this product, and why this team?
Yeah, I like that. That's really interesting. That's great. And of course, another small product plug, but for the CRM, you got to go to foundersuite.com and use our CRM. We invented the investor CRM category.
I love it. Well, I can't wait to try it out.
Yeah, it's. I like to think we were the innovators of that. But anyway, that's good. That's all really good stuff. What is the best way for founders to reach you? How do you like to be approached?
Yeah.
Anything in particular you're looking for? Like, I'd love to find more deals in XYZ.
Yeah. Listen, I'm really excited about how AI is supercharging all of these large categories right now, particularly interested in healthcare and personalization, AI-enabled tools for SMBs, deskless workers, and really excited by consumer AI right now as well. I think this is like a really big opportunity for consumer companies to be disrupted. The best way to reach out to us, email us, hello@bbgventures.com. We would love to hear your pitch. And, the best advice I can give you is, like, have a really tight, compelling introductory paragraph and attach your deck. Don't be shy to attach your deck. Don't try and hold it back. I think a lot of time people are worried about that. But even in your intro paragraph, try and get across the answers to those questions. Why now? Why this product? A little bit of traction and a few key notes on the team and why you guys can win at this.
That's a great rubric. I think that's wonderful. I have to hold your feet to the fire. Who reads hello@bbgventures.com? Where does that go to? Is it an intern? Is it an associate? Yeah.
No. We one of our associates reviews it right now. We probably will have AI into that workflow within the next 3 months, 6 months. I think that's really important for all firms right now. But it's trained on what we've invested. It will be trained on what we've invested in before.
That's super interesting. Are you guys building that yourself, just out of curiosity, or is that something you're
Yeah, we'll probably build a custom GPT for that, and we'll also probably look at using one of our investments' personal AI.
Super interesting. Yeah. Very cool. All right. Anything last question? Anything you want to plug or promote right now? You guys are doing anything?
And I hate to cut us short, but I have to hop out of this room so
Yep.
my husband can use it for a meeting. But this was so fantastic, Nathan. Thanks for having me.
This was awesome. Thank you very much. Super. I mean, literally loads of notes. So that's always a good sign. Thank you very much. I'll let you go.
Thanks for the
Awesome.
time.
Have a great day.
Bye.
Bye.